Welcome. This is Core Services Core Beliefs blog. Uh, it's our educational series on accounting, management, and auditing and how it matters to the Common Interest Realty Association industry. Today's series is on why it matters. The board approval over budget expenses, also known as the cost overruns. Before we get started, a little bit about Core Services. We are focused primarily on audit and reviews in the common interest realty area, condos, HOAs. We do a lot of work with condos, especially where they start having complex accounting needs for investments or more often than not special assessments. The leadership of CORE has over 40 years of combined experience in working with these types of associations. And we also offer advisory services. We can monitor board meetings. We can help offer advice on how to streamline the meetings and make them more effective. We can supervise and oversee the votes, especially if there's contentious issues that may pop up. And we can also offer other advisory and accounting services where you need more involvement with, say, how to set up the proper accounting for a special assessment. For those that don't know, Doug McLean is a co-author of the book Trade AOHOA Stress for Success. And he brings a lot of that common sense to our auditing and review approaches. So for today, we're going to discuss the internal control system and the board's involvement in reviewing and approving cost overruns. So before, as part of that, I think it's important to understand why it's necessary to create an effective internal control system. First is obviously to reduce the risk of accounting irregularities and errors. You don't want to be going along 2 or 3 months and then find out that the information you've been relying upon has in fact been recorded inaccurately. That means that obviously the last few months haven't been correct and decisions may have been made that can't be reversed. Another really strong reason for internal controls is to reduce the risk of financial improprieties, also known as theft. Having good checks and balances means that there is no one person who has total control over a transaction or a part of a transaction. So there's far more reliance upon the fact that the system can work correctly. And the ultimate goal of an effective internal control system is simply to increase the trust in the information being reported. So always focusing on how we do things, why we do things, and is somebody else reviewing those transactions who has absolutely no dog in that particular fight isn't a crucial part of internal control. So the board has a role in that internal control system. The association's board is primarily responsible for oversight, overseeing the operations that either its employee management or its outsourced management do on a daily basis. Doesn't mean the board does it. It means that they are responsible for ensuring that at the end of the day, everything is done correctly in accordance with the policies and procedures that the board requires. Parts of that oversight include establishing the budget, reviewing the financial statements, and to ensure that there's no inaccuracies or, again, cost overruns, or that you're not running into collection issues. It's understanding whether the transactions are accurately reported. Again, we do a lot of work with condominiums where they have special assessments, and it is amazing how often the special assessments were not recorded correctly to begin with, especially when it comes to interest and in that bank loan. So it's really important that the concept of the accounting be understood and its impact and how it should ultimately be recorded. And then finally, the board really wants to pay a particular attention to monitoring those expenses, and if there's a cost overrun, getting an answer as to why, if it's a one-time deal or if it's going to be a continuous thing. Because the board is responsible for the money that their neighbors have paid into the operating fund and to the reserve fund. So you don't just want expenses being paid that that potentially eat into your contingency reserve without a really good reason. So the board is ultimately needs to know what is happening and approve those transactions which were not originally anticipated in that budget. So what we have here is what we call the issue we're going to discuss today that I think highlights a lot of the problems that we face. As you'll see, there's a series of accounts. This is all grouped together into what's known as the landscaping maintenance group. So on a financial statement, we would combine these accounts together and we report the total. So as you can see, it from rough glance, it's over budget, or it's under budget in total. And so one argument is, well, management was given permission to spend, well over $5,000 or $12,000 to handle the landscaping, and in fact they came in about $500 under that. But what we as an auditor would look at is say, okay, number one, you have a budget category that the board said, hey, you could spend $750. You actually spent almost $4,000. Did you get board approval to go ahead and spend in that category? Is it in fact maybe a misclassification? For instance, 5020 landscape maintenance contract is under budget by $2,500. Did the accounting department incorrectly record a transaction to landscape maintenance as opposed to the contract? Again, going back to that internal control thing, who verified the transaction was recorded correctly? But if in fact it is accurate and you overspent, our belief is that because it's a line item budget, going over budget in that particular line must be approved. It's not taken in the total because they didn't approve the total. They approved the amounts to be spent in specific categories. So, like I said, management does push back sometimes. Says, well, we don't need to get approval. And if the board doesn't want to have to get into that detail, that level of approval, they really shouldn't. They should be passing the landscape maintenance expense group budget of say $13,000, and then how it is broken down between the various classes, account classes that go into that, is management discretion. As long as the total doesn't exceed the budget, then it doesn't really matter. We'd be totally okay with that. But what we see in a lot of cases is an effort to try to get to the detail. We want to know how much we're going to spend on the maintenance contract. We want to know how much we're setting so much money for overall general landscape expenses, say new sprinkler heads or laying down bark dust. Those are very important line items apparently when this budget got set up. So going over in one area does lead to the need to explain and make sure that there are appropriate approvals in place. So what does this really mean? So when we talk about documenting that approval, it just at the next board meeting, the manager may have brought it to the treasurer's attention. So the treasurer might make the motion and says, I move to accept the cost overrun of $2,000 to replace sprinkler lines that the landscape contractor says need to be replaced. You'll notice it specified the account, the landscape maintenance. It specified the amount, $2,500. Another board member would then second that. This is just classic Robert's Rules of Order. So another board member says, I second that motion. The president moves to debate. And are there any concerns, any conversation? If there is, they discuss it, they debate it. The president then can close the debate once it's all done. We then call the vote. Do we approve the motion to approve the cost overrun for $2,500 for landscape maintenance? If everybody agrees, or if the majority agrees, Then the vote passes. It's then approved, and you can move on. All that's necessary is the secretary records the motion and records the vote. The debate doesn't need to be recorded. Only the motion and the ultimate resolution of that motion. Did it pass or fail? But we want to be very specific. Make sure the motion addresses the actual issue at hand. You're probably talking 5-6 minutes in a board meeting to deal with this. If there are a lot of cost overruns, I think it begs the question whether your budget was in fact prepared accurately. But if you're three-quarters of the way through the year and you run into one budget category that looks like it's going to go over budget because of a need, this should not be a strenuous and ongoing process. It's the aberration. It is outside the norm, so that's why it should be documented correctly. Again, why do you want to document this? Because boards change. We very seldom work with the same board, for instance, that actually contracted with us. We might contract in October, November. A new board might come in January or February. We don't start our audit until March. How do we know if it's not documented whether the cost was approved? So by documenting it, we have the record of the decision so that I don't have to go back to a board member and say, did you guys discuss this and is it okay? Documenting it eliminates that conversation. The managers should want to have it documented because management changes, and there is nothing worse than having a decision that should have been documented. It goes to the new management, and the new management questions whether it was an appropriate expenditure. It causes grief. It adds a whole bunch of time and complexity to the process. So even the management should basically say, no, board, I want you to approve this. It's to protect us, and it's to protect you. The reason why? Because the auditor is likely going to ask on a cost overrun. There aren't that many transactions that happen in these associations. So when something substantially breaks the budget, we're curious. Number one, we ask whether it was appropriately budgeted for. But what we're actually looking for is the potential that management wrote a check to itself and decided to stick it in that budget category with no documentation, and there's no way to go back to them and say this was wrong. So we're going to ask. Getting it documented simply eliminates the constant back and forth that happens in these audits. If you know it's a cost overrun and the board has permission, you can automatically tell the auditor, by the way, it was documented in the July 2018 minutes to approve the cost overrun of $2,500 for the landscape maintenance, and it's done. We can go look at the minutes. We see the secretary signed them. I mean, it's audit evidence, and that's really what you're trying to get to, is being able to prove to us after the fact that transactions you had permission to spend money on certain transactions. Again, that's why management ultimately wants to get approval documented in the minutes. It saves you time, money, energy, and aggravation. So in trying to close this up, one of these are the key things I think you should take away from today's conversation. You want to focus on documenting all your decisions. Addressing a cost overrun is a decision. Get it documented appropriately in the minutes. It is the board's responsibility to oversee the financial activity of the association, especially as it deals with cost overruns. If it's under budget, great, so be it. That it may mean that more money is going to have to be spent in that category next year, or it was just you over anticipated a category. But if it's going to go above, remember, the board went back to the owners and they took a finite amount of resources. If you're going to spend all that on a budget category, that means there's nothing left for anything else to be spent on. Getting approval simply helps with the board being able to go back to the owners and say we need more money if it's necessary. Management and the board need to make sure that board approval is incorporated into the internal control system for the management. It's the association's money. It is not management's. Management is given authorization through the budget to spend a finite amount. If you're going to exceed that, it is the board's prerogative to give you permission to spend it. So make sure that board approval is part of that in management's internal control structure. At the end of the day, taking this seriously helps reduce the risk of, again, accounting errors, accounting irregularities, and potential fraud. If the board is involved and the board asks the questions and the board gives permission, you've done your part in helping reduce the risk that the money is being improperly spent. And finally, it puts everything on the table. So it increases transparency, and transparency makes your life easier. I hope you enjoyed today's service. I will also be writing this up, but I thought we'd go back to the old-fashioned YouTube videos. But in the meantime, you can find us on the web at coreaccounting.com. You can call us at our number or send us an email to info@core-account.acct.com if you have any questions or you have a topic you would like us to discuss. You're also more than welcome to contact me on Twitter. And obviously, here's our LinkedIn addresses. Anytime you want, you're more than welcome to friend us. And we also have a company page on LinkedIn. You're also more than welcome to send us a message. Anyway, thank you. We hope you've enjoyed today's webinar on internal controls and board approvals.